Asia Morning Briefing. Hong Kong's FinTech Week belonged to stablecoins, not CBDCs. Once the future of digital money, central bank digital currencies barely featured this year as Hong Kong's focus shifted to stablecoins, and Brazil's Drex pause showed how even early adopters are rethinking the model. Welcome to Asia Morning Briefing, a daily summary of top stories during U.S. hours and an overview of market moves and analysis. For a detailed overview of U.S. markets, see CoinDesk's Crypto Daybook Americas.Six years after China's eCNY debut. Hong Kong's FinTech Week showed how the digital money narrative has shifted to stablecoins, as Brazil's Drex pivot, the country's own CBDC project, underscored waning momentum for central bank projects. Once billed as the future of sovereign money, central bank digital currencies are slipping from view as market-driven stablecoins take center stage. At this year's Hong Kong FinTech Week, banks, fintechs, and regulators focused on tokenized deposits and HKD-backed stablecoins rather than state-issued digital cash. The shift marks a turning point in the global digital currency experiment. Central banks are slowing their retail ambitions, Brazil's Drex pause being the clearest example, while private issuers build the infrastructure that CBDCs were meant to deliver. It could be argued that CBDCs were never born out of pure innovation but out of fear. When Facebook unveiled its Libra project in 2019, proposing a global digital currency backed by a basket of sovereign assets targeting its user base of 1.7 billion people, central banks panicked at the prospect of a private company controlling the world's payment rails. Libra's collapse years later left those same central banks racing to build digital currencies without a clear purpose. What began as a defensive move to protect monetary sovereignty has since become a slow, bureaucratic experiment, one that the faster, more adaptable stablecoin market has already rendered obsolete. According to the Atlantic Council, 137 countries and currency unions, covering nearly all of global GDP, have some sort of CBDC effort. Yet despite years of hype, only 3 have managed to launch one: the Bahamas' Sand-Dollar, Jamaica's Jamdex, and Nigeria's eNaira. Not the world's biggest economies. The rest remain bogged down in committees, pilot programs, and technical studies, unsure whether the public even wants what they are building. While central banks are still debating design papers, the private sector is already building the future of money. Pretty much all transactions will settle on blockchains eventually, and all money will be digital, Standard Chartered CEO Bill Winters said at FinTech Week. And what did he mention next? Stablecoins. BTC. Bitcoin BTC $105,082.36 is trading at around $105,930. Little changed over 24 hours, as the market consolidates following recent volatility and profit-taking from leveraged traders. ETH. Ethereum ETH $555.80 is trading near $3,578, slipping slightly as traders rotate into Bitcoin and unwind leveraged DeFi positions, though network activity and staking demand continue to anchor support around current levels. Gold surged over 2% to about $4,085 an ounce as soft U.S. economic data and a deal to end the government shutdown boosted expectations of a December Fed rate cut, driving renewed safe haven demand. Nikkei 225. Asia-Pacific markets advanced Tuesday, with Japan's Nikkei 225 up nearly 1%. As investors tracked Wall Street's rally driven by renewed AI optimism and growing confidence that the U.S. government shutdown will soon end. Winklevoss's Gemini crypto exchange falls as losses disappoint. Bloomberg. Bank of England confirms plans for temporary stablecoin holding limits. CoinDesk.